Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 1st of May 2026. The first chart is the S&P ASX 200 index. This is the parent index of the Australian Stock Exchange, the XJO. And this week the markets continued trading in consolidation mode. Spread narrowed, volume reduced, and the market recovered to close in the top half of the bar. That's showing you that there was buying support in the market and that selling pressure has eased. The market found some support down here. It's pushed higher in response, and now it's consolidating following that push higher. And that's why you get like a bull flag of sorts here. Note where that breakdown line is. The market did find some strength below the breakdown line. It's pushed above it, and now it's testing that line for strength from above, which is quite a strong move. And you'll note that the next two charts are still below this breakdown line, showing that this is the leading market at the moment. This is the stronger market of the three. Here's the mid-cap sector, and the breakdown line is here. The market found strength, pushed up to the breakdown line where the parent index pushed above it, and since then the market's traded sideways in consolidation mode. And it's looking like it's well placed now with a narrow spread bar this week, closing up near its high. Volumes remain low and below the average, so selling pressure doesn't appear overwhelming. The market looks like it could push to the highs of the range and possibly even challenge that level if trading conditions were favourable next week. It certainly doesn't appear like selling pressure is overwhelming at the moment, like it was previously back here. The market is looking much more stable, and it looks like selling pressure has eased and the market could attempt to push higher, either to the highs of the range, which is the breakdown line in the background, or above that, there'll be supply drawn out from the left here, which may cause the market some issues. So a challenge to the breakdown line will likely draw out some supply, and you'll have to see a period of absorption take place before it can continue higher. This is the small ordinary sector, very similar to the mid caps to a large degree. There's the breakdown line in the background. Price found some support and pushed up to the breakdown line, and it's since been trading in consolidation mode, very similar to the mid caps. Supply appears to be low, selling pressure appears to be low. Volume was below the average this week. Spread was fairly narrow, and the close was in the top half of the bar, recovering from the push lower initially. So this market doesn't appear like supply is overwhelming. You could easily push up to the highs of the range or this breakdown line in the background next week, given reasonable trading conditions, and a push higher and challenge to that level is certainly possible. I expect there'll be supply drawn out from the left here, very similar to the mid caps. This is the ASX financial sector, and it struck a few issues more recently with supply at the highs of the range up here, and demand emerging below that level. When the markets come up and challenged the highs of the range, supply's been drawn out. When the market's pulled back, there's been a period of consolidation in the background, and once again this week there's a period of consolidation taking place where there's actually buying support in the market, or at least supply reduces at this point, and that will allow the market to push higher again in response if trading conditions are favourable. Remembering just below that level, you had a period of consolidation through here as well. So there really is buying support down here, and there's supply up here. And at this point in time, the market's trading between those levels. At some point, we'll see which side is stronger, the buyers or the sellers. But at this point in time, the market's found an equilibrium between the two levels, between where demand is being found down here and supply is being drawn out up here. This is the ASX metals and mining subsector, and it found some strength at the lows of the range, similar to the overall market down here. It's pushed higher in response. It's well above the breakdown line in the background, and it's not even come back to test that level for strength like the parent index has done. Parent index is trading just down here at this point. So this market's actually fairly strong. You've got highs of the range there, and you've got a kind of bull flag forming through here like this. And the fact that the market hasn't actually tested the lows of the range there, the breakdown line in the background, suggests this market is fairly strong at this point in time. And given any sort of favourable trading conditions, it will attempt to push higher. I also note that volume was about average this week. So it was a bit higher than the broader market. And on that volume, the market pulled back and recovered to close mid-bar, relatively narrow spread. That's showing you that buying support was present in the market. When the market pulled back, there was some buying support emerge, and that gave you the mid-bar close and the failure to test the breakdown line in the background for strength. That's showing you there is strength in this market. There's buying support in the market, and if trading conditions are at all favourable next week, it will likely attempt to push higher to some degree, maybe just up to the highs of the range, or maybe challenging that level and really pushing higher and showing some intent. This is the ASX gold sector. It's been a little more tentative along with the price of gold overall. The market's got the breakdown line in the background here. It's respected that level quite well. Strength was found. It pushed up to that level. Now it's moved back into consolidation mode. This week it actually traded well below the previous bar's close, which was a bit of weakness emerging, but the volume being reduced and below the average suggests there wasn't overwhelming supply in the market, and that then suggests that there was a lack of demand in the market, and those people who did want to sell had to force price lower in order to find sufficient buyers to satisfy the sellers, and the market stretched lower in response. So that might be an exaggerated level lower this week due to the fact there wasn't enough buyers in the market to satisfy the sellers. Just keep an eye on that. You might find the market just recovers back to this level pretty easily in response. This is the ASX energy sector, and it pushed slightly higher this week after testing for supply early. Here's the test for supply below the previous bar's close. The market, after making good ground over the previous weeks, found it going a little tougher there, and it's come back in consolidation mode in response. It's been consolidating sideways for a month now, and just showing a little bit of buying support emerged over the last 2 weeks with a push lower and recovery by the end of the week, both weeks. So this market's probably looking like it might like to head higher again. It's suggesting that anyway. There wasn't a great deal of demand in the market this week, but when the market's tested for supply, it's found very little supply. That's why the volume is below the average, and then it's just floated up on a lack of selling pressure. So there wasn't a huge amount of demand in the market. If that demand increases to any noticeable amount, you'll see the market push higher in response. This is the ASX healthcare sector. There was some downside follow through this week in response to the modest breakdown bar, but spread narrowed considerably and volume was almost to the average. So it does look like the thrust lower is starting to reduce to a large degree. Look at these big thrusts lower here when the market was breaking down. And last week saw the thrust lower shorten considerably, and in response, there's only a modest down bar with a much narrower spread on very similar volume. So it may be that this downtrend is beginning to weaken. The sellers are becoming exhausted. There was an attempt to support the market in here. The market did do for 5 weeks a pretty good job at attempting to consolidate, and although that's failed, it does appear that the failure is nowhere near as overwhelming as it has done previously when the market's broken down really sharply with a very wide spread. So we'll keep monitoring this. It's looking a little more positive. Still not time to jump into the market, but it does appear that the thrust lower is shortening, and that suggests that the downtrend is weakening and perhaps becoming exhausted. We'll just follow this and see how it goes. This is the ASX industrial sector, and it's certainly trading sideways in a range. There was some support found down here. Breakdown line above is here. Through there, the market's traded sideways for the last 3 weeks in a little range, and volumes have been about average, slightly below average last week. The market tested for supply during that period, below the previous bar's close, and then pushed higher. So that was a good sign that the market's got some buying support in the market. There was some demand there. It's not looking particularly strong, but it's certainly not looking as weak as it did, say, back here, when there really was weakness emerge. If the rest of the market does find a bid next week, I expect this market will move up a little. It's going to have to challenge this breakdown level, and there'll certainly be supply to the left drawn out up here if and when the market does attempt to break out above this breakdown line in the background and attempts to push higher. This is the ASX consumer staples sector. This is the defensive sector that people move to when there's uncertainty in the market. And that's why this market has received a bid over the last period of time. This widespread down bar suggests that there's some sector rotation coming in. People who have been using this market to protect them have sold out to some degree and are moving perhaps to other sectors. Volume doesn't match the very wide spread this week, and that's showing you that there was sellers in the market, but there wasn't enough buyers to support the sellers. And because of that, the market was forced to stretch lower in order to find sufficient buyers to satisfy the amount of sellers in the market. And I do note the market did move up and close at a more logical level by the week's end. But it does appear that there was some in the market who chose to get out this week and perhaps rolled into some of the other sectors, suggesting that the market does think that there's a more positive stance coming in the market. Consumer discretionary didn't really show anything similar. You've got this range in here where the market is probably attempting to consolidate and perhaps accumulate. There was a small amount of demand found here. Here was a response to that. It pushed higher, some sideways trading, and a test for supply this week, pretty much within the range of that up bar. The market's consolidating here and perhaps accumulating. You'll note that the volumes are up around average now. Prior to that, volumes had reduced considerably and were below the average for a couple of weeks. So this market saw price break down up here, really stretch lower, and now it's attempting to consolidate. And it's looking relatively successful at that. It looks like the market will probably push up towards the highs of the range next week, up to here. I'm not sure it's strong enough to break out, but it does appear there's enough buying support in this market for an attempt to push up to the highs of the range. This is the ASX property sector, and similar to some of the other charts, here's the breakdown line in the background. This market's not reached that level yet. There's the highs of the range, the current range. The market did find a bid down here, pushed up in response. A little bit of supply was drawn out last week, and the market came back and tested for supply in response to that. The low volume suggests that when the market did pull back, that supply was low or selling pressure was low. That then allowed the market to float higher in response to the lack of selling pressure in the market to close pretty much at the highs of the range this week. That suggests that this market was actually absorbing supply here, and it wasn't actually true weakness. The market pushed higher, then faded lower, attempting to absorb any supply in the market or buy that supply in the market, which is a sign that the market's consolidating and perhaps accumulating up here in preparation for an attempt to push higher in response. That's yet to be seen. And the early stages of any accumulation is very risky, because if sentiment changes for whatever reason, this fresh new buying will be dumped pretty quickly. This is just the initial stages of an attempt to accumulate, and it needs to be respected until the market does break out and push higher, and the buyers who bought down here become committed to pushing the market higher and defending against supply. So just take it with a grain of salt at this point in time, but it does appear more promising. And most of the market does appear more promising at this point in time. Back to the parent index just quickly before I wrap up. You can see the market did find some support down here. It's pushed above the breakdown line in the background, and it's trading adjacent to the previous highs of the range. The market has been consolidating over the last few weeks. This week it dipped lower, testing for supply, testing that previous breakdown line for strength, and the low volume suggests that the selling pressure that was encountered as price pushed lower and tested this level for strength was low. And if selling pressure is low in the market and there's some intent in the market, and you've seen some intent being shown here when the market found a bid down here and pushed higher in response, then the market will likely attempt to push higher following that, either up to the highs of the range and then an attempt to break out, or an attempt to break out immediately. It'll require trading conditions around the world to become more favourable in response, but the market's anticipating that that may happen, and it's preparing for that. So just watch how the market trades early in the week. There may be some testing for supply at the lows of the range again early in the week. And if selling pressure is low and overseas markets are trading more favourably again, I expect there'll be an attempt to push higher, probably up to the highs of this little range here. Okay, thanks for your time. Back again next week. See ya.